Hello, everyone. Welcome to the lecture for Chapter 3 over the accounting cycle, financial statements, the closing process, and we're also going to do a couple of examples. Okay, so the first thing we're going to go over is the accounting process. So accountants do the same thing every single month. They follow the same process, and it's called the accounting cycle. And so this excerpt right here is taken right out of the textbook. And so you'll see that the first step is analyze the transactions, and that is simply just to decide which accounts are going to get debited and which accounts are going to get credited and for how much. And then we will journalize the transactions, and that's where we go to the general journal, and that's what we've been working at in class, where we have the debit on the top and the credit on the bottom, and there's a column for debit and a column for credit. And then also there's the journal ledger, where we post the entries. And so a lot of this is computerized now in the industry or in the profession. So there's not a lot of, doing the general journal and then posting to the ledger. But I create an example down here just so you guys know what a ledger looks like and kind of what it is. So a ledger is basically a sheet of paper that that you have for each account. And so here you have the general journal, and we have our different debits and our credits. So our first transaction would be like an initial investment of $200,000 into a business. So here is like the general ledger. This would be like an excerpt from the page from the cash journal ledger. And so you see that we have the details of that journal entry right here and on that first line for for May 1st. So May 1st, debit to cash, 200,000. And so we show it right here. And the reason for the journal ledger is that if you want to look at, say, just the accounts receivable for a certain client, or if you want to look at the accounts payable just for a certain creditor, you can ask for the ledger, and then you can look at the ledger, and it gives you the details for all that account. So you kind of see below here, like, for example, we have the supplies journal ledger, and that's for this entry right here on May 9th. And then we have the equipment journal ledger right here for May 3rd. And that's a debit to 18,000. So anyway, and then we have also the journal ledger for accounts payable, common stock, and revenue and expenses. So you'll have a general ledger page for each of the accounts in your chart of accounts. For each account that you debit and each account that you credit, there will be a general ledger account. So so 3 is post to the general ledger. 4 is prepare the unadjusted trial balance. And so that's what we're going over in this class, where the unadjusted trial balance is just where we list off all the accounts and the balance in them. So for example, cash increased with debit. And so you show it has what you call a debit balance. So you'll have cash, and there will be an amount in the debit column, what the total is for that account at the end of the month. And it does that for all the accounts. So for example, accounts payable increased with the credit. So you'll see an amount in the credit column for accounts payable. That's the unadjusted trial balance. Kind of gives you a little bit of an example here. And then you adjust and do the adjusting entries. We're going to go over that. And also then you post those to the ledger. So again, you enter in those adjusting entries into the general ledger, put them into the journal, or you enter them into the general journal, and then you put them into the general ledger. Prepare the adjusted trial balance. We'll go over that. It's just the trial balance after the adjustments are made. Prepare the financial statements. We're going over that in this chapter. That's the income statement, statement of retained earnings, and the balance sheet, and they have to be done in that order. And then we have then we're going to do the closing entries, what we're going to go over again, where we close out the temporary accounts, which is basically the revenue, expenses, the dividends or withdrawals account, and also the income summary is a new account that will come into play there. And then we reverse and post. That's an optional step. We might touch on that a little bit in this class. It's not going to go into a lot of depth though. So anyway, so that's the accounting cycle. So, and then once you do this, so you close the accounts at the end of the month. So that's step number 8. And then all this is completed for the end of the month. And then we start over for the next month, where we start journalizing, we post, we do the unadjusted trial balance. And so it's just a cycle that happens every single month. So, all right. So for our first step, for our first lesson into the accounting cycle, So you guys know how to do the debits and the credits at this point. You know how to do the unadjusted trial balance. If you don't, be sure to ask questions, and so that can be addressed. So let's do the financial statements first. So here we have, this is what you call a trial balance right here. Okay, so this is all of our accounts. So for example, we have our debit accounts, which is accounts that are increase of debits. They have a balance in the debit column, and they also have a balance in the credit column for the accounts that are increased with a credit. So let's do the income statement here. So the income statement is the first financial statement, and all it is it just shows how much money was made. So, which is considered our net income. Okay, so we're just going to take revenue minus expenses, and that's it. Okay, so we have our revenue, and that is 15,000. So I got that from just down here, and then our expenses then are 3,000 right there. So that is that's how you just do the income statement. So a business a lot of times will have multiple revenue accounts and multiple expense accounts. That's actually more normal to have multiple revenue accounts, multiple expense accounts. So you would have all the revenue accounts and then all the expense accounts underneath it, and it would give you your net income. The retained earnings. So this financial statement is done second. The retained earnings is essentially the savings account in the business. That's why they call it a retained earnings. You're retaining the earnings. That's the savings account. And you obviously want this account to go up. You want your savings account to go up. So you're going to have the retained earnings beginning is going to be, if you look over here, we start off with 20,000. And then we're going to bring our net income from up here. So that's the reason for the highlighted cells. So that's why the income statement is done first. So, and then we will have the dividends account underneath it, and that is 2,300. So this is the cash that we give out to the shareholders. So as you can see here, we started off the retained earnings at the beginning of the month at 20,000. We're winding out at 35,700. That's good. That means that our retained earnings is going up, or building up the savings account of the business. That's a good thing. It's better than it going down. So a lot of students make the mistake of putting the dividends, because it's kind of like an expense account, up in the income statement. The dividends or the withdrawing account does not go up in the income statement. It goes on the statement of retained earnings. So be sure to keep it there. And then finally, our last financial statement that we're going to cover until the very end of the class, when we start going over the statement of cash flows, which don't worry about the statement of cash flows. We're going to go over that in chapter 12, I believe. And so this is the third financial statement that we're learning for right now is the balance sheet, and it has to be completed third. And here's why. So here, the balance sheet means we're going to show the accounting equation. So you see right here, you have your assets, you have your liabilities, and then you have your equity right over here. And we know from the very beginning of class that the balance sheet, excuse me, or the accounting equation should balance, right? That's why they call this the balance sheet, because it's going to show that our accounting equation balances. So we're going to do cash is 78,700. Accounts receivable is 4,000. Supplies is 8,000. Equipment is 10,000. Accumulated depreciation. Now that's a contra asset account. That's why it's in the credit column. So that is 3,000, and we're going to go over that with the adjustments, or we did go over that with the adjustments. So that's why you should remember that that's a contra asset account. If you don't remember why that is, or you're kind of confused about it, be sure to ask questions. And then then you have the land account, and that's the end of our assets. Okay, so you see here we have a total assets of $197,700. Then our liabilities account. So these are our liabilities right here. So we're just going to plug those in. So this is going to be 10,000, 100,000, and notes payable is 8,000. So now we move down to our equity account, and the equity account we can see over here is $50,000. So we're going to plug in 50,000. Now, the balance sheet does not have the revenue and the expense accounts on there. And that's because, well, later we're going to discuss how we close the revenue and the expense accounts, but the revenue and the expense accounts were essentially accounted for through net income, which was taken down to statement of retained earnings. So we're going to use the final number on this, on the retained earnings account on the statement of retained earnings for our balance sheet. So it looks like I have a problem because this is not balanced and I don't know why. Okay, so let's do a little bit of research why this is not balanced. Okay, so right here, I look at my net income and this doesn't look right here. So, and I know there's an error because these two numbers should be the same. Again, the accounting equation must balance. You have the assets equals the liabilities plus equity. So, but I'm looking at my net income right here, and 15,000 minus 3,000 is not 18,000. And so there's something wrong with my formula here. And you'll see right above here that I subtracted the negative number, which gave me 18,000. So I should do the addition, which means I add the positive number plus the negative number. That's 12,000, which corrected it down here, corrected it right here, and right here. And as you can see, now I am balanced. Okay, so we got the statement of retained earnings from right here. And everything is good with my income statement, statement of retained earnings, and balance sheet. So that's it for the financial statements. Next, we will move on to the closing process.